What is up, ladies and gentlemen? Today we have to talk about one of my favorite strategies to use when trading. Now, this is a long-term strategy. This is going to be a strategy that is really going to break down exactly how the market works. This is going to be best for new stocks that are actually looking to turn profitable, and I will explain that in today's video. But I do want to give you guys an overview because this is a recording from one of our webinars that we just did. If you guys want access to any of our future webinars, make sure you guys do check out the first link in our bio. That's going to send you over to our Discord where we do have the sign up for our webinars over there. But I did want to let you guys in on a little sneak peek because I thought this was really well explained on my part, and I do want to bring this forward for you guys so you guys can understand a little bit more about the cup and handle strategy. Now, I don't want to waste any more time. We're going to go ahead and jump right into this video. So make sure you guys do like and subscribe as always, and let's go ahead and jump right in there. So I did want to get into some psychology stuff with the cup and handle because I think this is a great way to explain this. And really, this is like the thought behind what a cup and handle actually is. So we all know Oscar has a great cup and handle, right? I do want to talk to you guys exactly about what we're seeing. So on the left here, where when they IPO'd at $37 and they immediately shot down, right? This is their investment stage. Every company is going to go public so that they can get more money, because that's what happens. You get money generated from the money that's been put into your stock and so on and so forth and going public, all that jazz. So they're going to take that money, invest it. Obviously, they're a new company looking to get some things turned around, and that's what they're looking to do here. So they're investing this money. Price is obviously going to drop because you're seeing their free cash flow go negative. Maybe they're going into a little bit of debt. The very casual stuff that companies do. Now, here is the stage where things start to get, oh, they have a bit of an idea. They're starting to figure out kind of what's going on. Now they're starting to get their plan. And I call this the prove it stage. This is where you're going to either see this company turn into a penny stock and just continue to go down, or you're going to see them start to rebound. You're going to start to see, you can see earnings start to stack up here. And these last three earnings were missed by a hair, and that's coming off of ACA, but whatever. Overall, you can see they start to pick it up. And share price does start to, rise. Now, the stage that we're currently in is going to be the accumulation and manipulation stage. This is the stage where they're right outside of profitability. You can tell it's coming, but market makers don't want to release it yet, basically. So they're going to hold this in this box, and I'll show you guys some examples on stocks that this is played out with. And it is kind of like crazy to look at because it happens every single time. There is a point where, although this company is looking to turn profitable and they're about to do so, there is still analysts are downgrading this stock and, oh, this might be a big issue. They may have this come into play. This might happen. And then the stock gets shorted back down a little bit. And then you see that move start to accumulate. And we all know the bigger the base, the bigger the breakout. So the longer that this takes to play out, the better off we're going to be in the long term. And then finally, we have company acceleration into profitability. Now, obviously, that's when the company actually hits profitability. That's when the company is actually accelerating through profitability. They're starting to generate free cash flow. They're starting to do it at a better rate, quarter over quarter and year over year. So, what this does look like is other companies that we're invested in. So, HIMS. Here's a very, very clear strategy that is also a cup and handle, and it played out the exact same. You can see right here, we IPO. Obviously, the company gets a lot of big hype off the rip. The company was not profitable in the slightest when they IPO'd, and so they did do a lot of investing, push the stock price down, right? Then they get into this prove it stage. We're saying, are they going to just fizzle out, be a penny stock for the rest of their time on the market, or are they actually going to start to figure it out? And they obviously do start to figure it out. Stock price, more than doubles up to $10. And then we see accumulation and manipulation. We see the stock price get driven all the way back down to barely $5. And then from there, you guys can see from $5 all the way up to 72, well over 1,000% gains. And obviously, we have made a great amount of money along the way. And then into the company's acceleration and profitability stage, obviously that's where they are right now. They're still working towards consistent and strong growth upwards through their company, but they are already showing that they're looking to do that. They already turned profitable, and we've already seen the profitability actually increase quarter over quarter and year over year at great rates. And so that is why, even with the company being up so much, we are still very confident in them to continue higher, because they do continue to execute. You do continue to see good things come out of them. And every single quarter and every single year, they are posting better numbers than the year or quarter prior. Now, lastly, I do have Palantir. This is another obvious one. You get your investment stage right here. Stock price drives down. You get a prove it stage where the stock hits a low of $5.92. And then now it's at 190. It's crazy. But then you get this accumulation and manipulation phase. Now, this really isn't much of of shorting as we saw with Oscar and with Hims. But overall, you can see that there is a clear accumulation stage where you are getting some consolidation above this cup. And then from there, obviously, we know it went over what 2,500% in like 2 years. So this is obviously a very, very clear and repeatable strategy that we can pick up on, and it's about pattern recognition. You recognize these patterns in the market that do not only line up with technical analysis, but it does also line up with your financial, understanding of the company and seeing what they do. When Palantir was starting to figure this out, you want to know exactly where they got this government deal? Right here, right on this candle, right after it got shorted down, they got the first government deal that was really saying, "Oh wow, this company is going to go, do something." And this was around the same time as their earnings. I believe it was like within the same day. And then, or sorry, this was the government announcement, and this was the earnings that really pushed it up. And so you can see, what happens when something like that happens. Back with Hims, you guys can see back here, these are coming off their earnings reports where they just absolutely blew it out of the water. And then you start to see these big jumps in share price. And although it's been volatile, still being up 700% in the last year is pretty crazy. So in my opinion, with Oscar, we're going to see this company acceleration into profitability. This is going to happen when ACAs get extended because that is going to add another $4 billion to their revenue. And then from there, they're already looking to turn profitable in quarter one of 2026. So I think we can really get a blowout quarter if we really do see ACI get extended and they get to add all that revenue back into their business. So that is really all I have here. I'm going to go ahead and hand the reins over to Wheelie. While he's getting set up, if you guys do have any questions, let me know. If you guys had anything else about long-term investing, I'd love to answer it. But I'm going to go ahead and turn my screen off here and hand it over to Wheelie so he can go ahead and dive in.
All right, cool. Let me just make sure I can get everything set up with this presentation.
Bet. All right.
All right, how does that look, Jacob?
Yeah, looks good.
Still up? All right, all right. Okay, so my part of this presentation is about selling options. So with this strategy, you can build consistent income, but also be risk averse and
All right, guys. Well, that is all I have for you guys. I hope I was able to break down the cup and handle strategy in a way where you can actually understand it. That's what I was aiming for there. Now, I hope that you guys also do understand what I meant when I was talking about the stages, talking about how we actually do flow through this and why the cup and handle strategy is bullish. We all know it's a great strategy. We all know why it works, but understanding what this means and why it is actually bullish is going to be the most important factor for actually taking these trades, understanding what this trade means, and also understanding a good company and a good opportunity when you see it. Now, once again, make sure you guys do like and subscribe as always. I thank you for watching till the end of the video. And two more things. Make sure you guys do check out that Discord link. We got over 5,000 members over there, so make sure you guys do come chat with us. And lastly, check out each one of these videos, see which one pertains to you best, and take a look if you want. I'll see you guys in the next one.